Shuaib, let's hone in on Nigeria's market activity that we're seeing. We've seen a massive decline on this market last week. Only Thursday and Friday, the market managing upticks. Run us through what sense you're making of the movement we're seeing right now.
Thank you, Alicia, for having me. As you mentioned, the market on Friday went up by 1.29%. However, the preceding 5 to 6 days before Thursday and Friday, the market came down by around 6 to 7%. Obviously, we're seeing a lot of negative sentiment as a result of, or the initial negative sentiment as a result of the budget cut. The federal government is expected to cut the budget spending by around 40%. But we still think that overall, this should have a positive impact on the economy because the federal government is being a lot more realistic with the market trends generally. The oil price benchmark that was used for the initial budget was $67, and right now we know oil prices have been coming down as a result of the issues with Greece and Euro and generally less demand. But overall, we think that this should create a good opportunity for buyers over the medium to long term. Our expectation is that ROE for the banking sector should be round about 15% in 2010 compared to 2% in 2009. And for the conglomerate sector, we expect ROE to be around 45%, compared to 20% in 2009. So there are a lot of good opportunities, especially when you compare them to other frontier markets like Ghana and Kenya.
Well, Charles, all of these good prospects and positive sentiment are coming to the fore at a very interesting time where we are seeing, as we were highlighting earlier, a lot of reforms are taking place. We highlighted some of the reform in the banking space. Let's take a look at the oil sector specifically because a lot is hinging on the petroleum industry bill right now. What are you making of the strides that we're seeing on that front?
Well, obviously, that's a very key sector for the Nigerian economy. It's a lot of time has been taken to get this right. A lot of effort has been put in to get this legislation through and to make sure it's workable. But if you look at what's happened in the market overall, people are concerned that there's a minor correction last week, and that's how I see it actually, as a minor correction last week. That since January, the market has recovered by about 30% in the Nigerian market. So every now and then there are going to be profit takers. If you look at it in the context of Greece and the euro, there are going to be people who think, well, there's too much risk or that prices are not right at this point in time. But the long-term view is a very strong one. The economy is going to grow strongly, I believe. And Nigeria's budget now, as Shuaib pointed out, is a realistic budget, but it's a budget which means that people have to get used to tightening their girdles, as it were, and people are going to have to be realistic about expenditure patterns, which is going to be difficult to accept for some, but it is necessary. The petroleum sector, though, is the engine of the economy. So it's correct that there's a real process that takes place there. And the extent of the reform in that sector is considerable because it's so key. It can't be a minor slapstick sort of thing because of the significance of that to the economy.
Well, Shuaib, the reforms that we're seeing here and the extent of the reform has significant broader implications on the average man on the street as well. Just how are you seeing the implications of this moving forward?
First of all, the petroleum marketing sector has been up by close to 30% this year. Obviously, that has been tempered down as a result of the debate on the ongoing petroleum industry bill. Generally, the government is pursuing that route because it would make the petroleum marketing sector and the petroleum industry, both downstream and upstream, a lot more efficient. However, the worry is that for the average man on the street, as you mentioned, the expectation is that once the PIB bill is passed, obviously prices will be deregulated and the prices will head northwards. So the Nigerian Labour Congress and people in general are a bit hesitant and haven't really backed that reform as much as they should. Plus, because the elections are just around the corner as well, the presidency and the federal government generally are a bit hesitant to pass the bill.
Yep, but they're hesitant on that front as well. It's an election here, Charles. I mean, looking forward, even with the budget cuts, where one would assume that it would imply a natural cutback on infrastructure spend, spelling implications for the likes of Ashaka Cement, for CCNN as well. It might not be as drastic as we think, simply because we're sitting in an election here.
Yes, I mean, typically governments increase expenditure prior to elections, and that's been standard practice. The cement sector that you mentioned is very key as well, because obviously with increased expenditure on infrastructure, there's obviously going to be a knock-on effect in that sector as people build and use cement for building and civil works, etc. So yes, the budget would typically, you would typically expect that there would be cuts for structural reasons, but and that's what's taking place right now. But I think that the actual effort of the government is to say, let's be very specific where we spend money. There's a lot of wastage, and I think that the effort is really to say that we typically spend money in places and we can't see meaningful results. I don't think that the government is envisaging a full-out reduction in expenditure on key areas. I think what you're going to find is that the government wants partnership with the private sector and wants efficiency. So I think that some of the alarm that people feel, which Shuaib referred to as to the reasons as to the sell-off last week, a bit overdone. I think that this government realizes that there's a need for increased expenditure in some very meaningful welfare areas, in education, in infrastructure, in power, particularly in infrastructure. And I therefore think that's going to have a very strong fillip to the economy. It's going to give it a meaningful push.
Shuaib, so in that context then, how are you playing the building space specifically? I mean, we saw the building material sector specifically gaining 3.7%, the rally primarily driven last week by Ashaka Cement and CCNN. How are you playing in that space right now?
I mean, the building material sector generally is always going to be impacted by the budget and government spending, and initially, there was a decline briefly as a result of the cut. But what we've seen historically is that election year cycles are, preceded by excess government spending. So we expect that to be tampered down. We think that once government spends, their main focus is usually infrastructure. And obviously, if you want to run for election, you better have, some infrastructure on grounds to with which to campaign with.
Yeah.
So I think in terms of our outlook on the building material sector, we think that the valuations still look attractive. The likes of BCC and CCNN still provides good medium to long-term value for investors. And even when you look at the Nigerian Stock Exchange as a whole, the projected PE, or the forward PE, is just around about 6, which is still extremely attractive relative to other frontier markets, like I mentioned earlier.
Well, if we look at who's playing the markets here, Shuaib, I mean, last week we saw, for example, the insurance stocks receiving a nice boost, but commentary had been that this was driven primarily by speculative players. To what extent are we at inherent, a sustainable upturn right now, or are we facing inherent risk in that speculators, given the low valuations you've highlighted earlier, could be easily coming into this market very quickly?
I think the insurance sector has done poorly, relative to the other sectors. On a year-to-date basis, the insurance sector as a whole is down by, close to 7%. And generally, the major challenge with insurance companies is the penetration rate. In a country like Nigeria, where there's 150 million people, the penetration rate is below 5%. So obviously that's going to have an impact in terms of premiums, in terms of signing different clients and bringing them to get or to have insurance mandates, to take insurance on their cars, on their buildings, etc. So I think we still expect some challenges generally in the insurance sector. Yeah. But within that insurance sector, we've seen a couple of well-run companies the likes of Custodian and Allied is one of those well-run companies, and GTA Assurance as well. So I mean, we should see some positive numbers for those two companies.
Well,